African Americans out here. I'm gonna be one of the first people to say it. The Caucasian Republicans was right. Biden ain't the man that found out that black people are turning $20 into $200,000 by jumping into the cryptocurrency with these Shibas, these Doges, these Kinsus, these Safe Moons, and now he trying to put tax on it because he know one thing. Black people ain't trying to let their money sit that long. If we hit for 10,000, we pulling out. Now he want to put taxes on all this. We ain't have no problems. I want to rescind my vote, and I want Trump back in the damn chair. Because one thing about Trump understands business, and he don't like people messing with his money. And right now, Biden is trying to mess with our money. We don't like it. We sorry, Caucasian Republicans. I am personally sorry.
To some of you guys that are new to my channel, periodically I like to make videos about the stock market and cryptocurrency and stuff like that because that's basically my background, right? In my past corporate life, I worked in financial services. So, I understand a lot of this stuff, and it's interesting. Okay, and I think it's also tied into politics and what Biden is doing with his, tax plan and all that stuff. And one of the reasons why, I'm so vehemently opposed to the Democrats is because of taxes. I'm the type of person that I would rather keep my own money. And most of the time when it comes to the Democrats and them talking about, raising taxes and stuff like that, they always try to frame it as if, well, we're going to just raise taxes on the wealthy, right? The wealthy are going to pay their fair share. And I do think that most people would agree with that statement. However, smart people understand that that's typically not what happens, right? Our politicians are bought and sold by the wealthy, okay? And with that being said, the wealthy are not going to buy and sell these politicians knowing that they're going to turn around and increase taxes on them. At the very least, if they do increase taxes, it ain't just going to be on the wealthy, right? The middle class is always going to take a hit. And it looks like, Biden here really is proposing some plans that is shaking not only just the stock market, but also the crypto market. The first thing that really shook the stock market was when yields on U.S. Treasury started to rise. There was some inflation concerns, okay, and that resulted in a lot of volatility in the market. And then Biden pitched the idea of raising the long-term capital gains rate to like 40%, 45%, something like that, something crazy, right? And the stock market reacted negatively to that. And now it looks like Biden is coming after the crypto market as well. So Biden administration is now targeting crypto transfers in a tax crackdown plan, and this is something that those of us who are invested in cryptocurrency and whatnot, because this is what is contributing to the bear market that we're seeing right now in crypto. As Bitcoin, I think it got up to like 60K, is now down around 33 as of this video. So let's read a little bit more here about how the Biden administration wants to crack down on crypto. And this is something that's, been the word on the street, that Janet Yellen and, the feds, really want to try to rein in the crypto markets to a certain extent. So let's read here. Crypto transfers of more than $10,000 will have to be reported to the U.S. tax authorities under new Biden administration proposals that come amid a tightening of regulatory environment for digital coins. And guys, this is kind of a big deal. Okay, because, when you put money in, Coinbase or in one of these exchanges, right? A lot of times in order to invest in certain coins or to invest in certain things, you have to transfer the money around, right? So you have to transfer, let's say, Bitcoin to another exchange to buy some coin or whatever, if you just want to keep your money in a wallet or whatever, right? So each time you transfer a coin or money and it's more than $10,000, that has to be reported under Biden's new plan. Okay, so for small investors, people who aren't transferring more than $10,000, it probably won't be an issue. Matter of fact, you'll probably get a lot of people transferring $9,999 just to not have to report it. Okay, but for those of us who have more than that, intend to transfer more than that, we're gonna have to start reporting that to the IRS. The U.S. proposal unveiled a day after China signaled a regulatory crackdown of digital currencies is a part of a broad set of proposals aimed at curbing tax evasion. All right, so China, if you guys didn't know, basically has try to crack down on Bitcoin, right? They're trying to ban traditional financial institutions in China and online payment services from doing any transactions with cryptocurrencies, right? They've already banned exchanges, crypto exchanges and stuff like that. Now, they haven't banned people from holding them, but they are cracking down because word on the street is that they're going to come out with their own coin, or at least that's what the speculation is, that, you know, China might have their own thing. So that's what's also contributing to this bear market here. The price of Bitcoin, the most actively traded cryptocurrency, fell 5% after the U.S. announced its proposal. It followed a chaotic few hours of Bitcoin trading on Wednesday when China's central bank warned financial institutions about accepting cryptocurrencies as payment or offering related services and products. The price of Bitcoin fell as much as 30% after the comments before eventually recovering. Jay Powell, chair of the U.S. Federal Reserve, weighed in on cryptocurrencies on Thursday, saying the U.S. authorities should be paying attention to private sector payment innovators who are currently not within the traditional regulatory arrangement applied to banks, investment firms, and other financial intermediaries. He signaled out financial operators offering so-called stable coins, those whom value is tied to the dollar, as posing particular risks to financial stability. Now, what he's talking about here is what they call Tether, right? And Tether is a stable coin that is pegged to the US dollar, or at the very least, that's what they're saying. Now, Tether, the company that operates that, has been investigated by states like New York because apparently there's some, evidence that they may be fraudulent, that they may not actually have the dollars to back up the Tether coin. Okay, so the crypto market could be one big Ponzi scheme. It could be, because if they don't actually have the money to back up Tether, and Tether is being used to buy Bitcoin, Doge, Ethereum, Litecoin, all these other coins, the market could essentially crash if everybody decides they want to try to redeem their Tether at one time, and then Tether does not have the actual dollars to back it up. So that has led some states like New York to basically ban Tether. And again, that's also a part of the risk of being invested in cryptocurrencies, is Tether. Now, if you want to reduce that risk with Tether to a certain extent, there's this coin called USDC that is more legitimate. So if you're holding Tether, you might want to switch into that USDC if you're holding a lot of that, just to be safe, or put it this way, to be safer, because nothing is risk-free. No investment is risk-free, including holding the dollar. That ain't risk-free as well. But again, guys, this ain't financial advice. Okay, consult your financial advisor about this. I'm just talking, right? So let's read a little bit more here. The U.S. Treasury said cryptocurrencies pose a significant detection problem by facilitating illegal activity broadly, including tax evasion, echoing comments from the European Central Bank this week. Said that cryptocurrencies' potential use for illicit purposes were a cause for concern. The U.S. proposal is part of a Treasury report showing how Joe Biden's White House plans to close the so-called tax gap by strengthening the Internal Revenue Service. The report is the latest in a series of White House proposals that would lead to the wealthiest Americans paying significantly more tax. The Biden administration intends to close the tax gap, the difference between taxes owed to the U.S. government and those actually paid, by investing nearly $80 billion in the IRS and expanding the Revenue Service's ability to identify wealthy individuals who avoid paying taxes owed. Now, if you guys didn't know, a lot of people that are actually audited by the IRS, a good amount of them aren't really paying any taxes, okay? Or that at least report that they don't owe any taxes. And, so a lot of people that the IRS targets for audits are actually people that are on the lower end of the income spectrum. Now, they do target, wealthy individuals too, but, at the same time, with that being said, with Biden adding more money to the IRS, it seems like they're going to try to go after a lot more Americans in terms of getting tax money. So, I wouldn't be surprised to hear that, audits are way up over the next few years as the Biden administration tries to crack down more on tax evasion. Again, this is what people are voting for here. And I'm not condoning that. I'm just saying, at the end of the day, me personally, I would like to keep my money. right? I'm not a big fan of taxes, especially when our taxes are going to this country and that country. And I just don't think that the government is using our money efficiently. I don't think that the federal government can use our money more efficiently than the private sector. Okay, that's basically my thought process when it comes to this stuff. So with that being said, I'm just saying, like, I wouldn't be surprised to see more audits over the future. And I think that it is going to affect the middle class and those who are on the lower end of the income spectrum, despite what the Democrats are saying about, oh, we're just targeting the wealthy. Just use common sense, guys. Just use common sense. Okay, these politicians are bought and sold. Washington is bought and sold by Wall Street. Are they really going to target them? Yeah, some people will be targeted, okay? But a lot of people that are going to be targeted are not going to be those that are quote-unquote wealthy. I would expect that those of us who own small businesses or sole proprietorships or something like that, I think we're going to be the ones that are going to be targeted by the IRS, because it's a lot easier to do things to not necessarily pay, taxes when you have your own business. Now, when you're working for a company and wages and you're automatically getting money taken out of your paycheck, again, like this article outlined, it's easy to collect those taxes. Okay, so the compliance on those is going to be pretty high. There's no need to target those people. They're going to be targeting people who have to pay taxes themselves without having to go through an employer. The proposals include new disclosure requirements for financial institutions, which would need to share information about IRS about the total amount flowing in and out of bank accounts in addition to existing reporting. According to the Treasury, the overall tax gap was $600 billion last year and is forecast to rise to $7 trillion in the next decade if left unaddressed. The Treasury said roughly 99% of taxes due on wages were paid each year, but compliance on less visible sources of income that were more likely to be associated with high earners, such as proprietorship or renter homes, was estimated to be far lower. Treasury estimates suggest the proposed IRS overhaul would raise $700 billion in extra tax revenue in the next 10 days and $1.6 trillion in the following decade. The Treasury said under the president's proposal, audit rates would not rise for people making less than $400,000 a year. That's what they're saying, but again, I would not believe that. I'm just saying. The proposals are part of Biden's $1.8 trillion American Families Plan, an ambitious legislative package that, if approved by Congress and signed into law, would usher in a major expansion of federal funding for childcare, higher education, and family and medical leave in the U.S. The White House has proposed paying for the plan in part with roughly $1.5 trillion in tax increases on wealthy Americans, including a near doubling on levies on capital gains for people earning more than $1 million. That's what I was talking about before with the long-term capital gains rate. The proposed tax increases have sparked a backlash among some critics on Wall Street and in corporate America. The plans to crack down on tax evasion may prove more politically palpable for lawmakers in Washington, particularly Republicans who have raised flags about any reversal in Donald Trump's 2017 tax cuts. The American Families Plan, set out by the White House last month, is the third component of Biden's far-reaching economic agenda, following the $1.9 trillion fiscal stimulus bill, which was signed into law in March, and the $2.3 trillion infrastructure proposals that is being debated on Capitol Hill. Republicans have largely rejected the president's proposal, accusing the Democrats of wasteful spending that risks driving up inflation. GOP senators have offered a nearly $600 billion counter proposal to the president's infrastructure package, though Republican lawmakers have in recent days suggested they are open to a package with a price tag closer to $800 billion to $900 billion. All right, guys. So I believe that Biden did a counter proposal of about $1.8 trillion for his infrastructure package that the Republicans have rejected. So here's the thing. As this article suggests, the Republicans could be open to Biden's tax evasion plan, right? To crack down on that, because obviously the Republicans don't want to raise tax rates, but at the same time, if they are actually willing to spend $900 billion on infrastructure, they're going to want it to be paid for. And if they're not increasing taxes on the rich, then the other way to actually get that money would be to crack down on tax evasion in order to raise that money. Okay. Now, I don't know if the Republicans would actually get on board with that. I have no clue whatsoever. But at this point, it seems that this is going to happen under the Biden administration. It's probably more likely than not. And on a worst case scenario, the Biden administration goes at it alone and they end up, cracking down on tax evasion and also increasing taxes as well. Okay, if they decide to go at it alone. But, you know, again, I don't know if all the Democrats, particularly the moderate Democrats like Joe Manchin and Kirsten Sinema, who have been holding this thing up and who have been a thorn in their side, are actually going to go for all of that. But who knows? They may all be on board with cracking down on tax evasion. I don't know. But like I said at the beginning of this video, guys, I mean, them cracking down on crypto, right? A lot of people who have benefited that are not just the rich. Crypto has opened up investing for people who are on the lower income spectrum. Okay, there's an opportunity now for people that, you know, aren't making that much money to all of a sudden make significant gains in the market, and they actually really make a lot of money through crypto. I mean, there's so many people who, you know, were lower income who just invested, you know, maybe $1,000 in Doge, or, you know, a few $100s in Doge, that are up tens of thousands of dollars, right? They're making life-changing amounts of money, and the Biden administration wants a piece of that. They want a piece of that. So again, when they say they're not raising taxes on the middle class and on the poor and all, bro, it's hogwash. They may not do it through rates, but they will find other ways to do it into finesse. And that's what I want you guys to understand. Okay, and them going after the crypto markets is an example of them low-key trying to, you know, extort money out of the middle class and the lower class. Okay, now, quick commentary here in regards to the current state of the crypto markets. Back in probably November, I made a video when Bitcoin hit around 20,000, when it passed 20,000 again for the first time since 2017. I said, you know, I expect it because it's been adopted by institutions to a certain extent. I was like, all right, it'll probably get to 50,000 and it'll maybe run to 75,000 on this bull market. Now, it did get up to 50,000. It passed that. It didn't get up to 75,000. But, you know, if you believe in it long term, then this current bear market could be a great buying opportunity. If you believe in it long term, if, you know, you don't think Tether is, you know, too big of a risk or whatever, as crypto starts to crash down, maybe Bitcoin gets around to 20,000 again. If it gets below that, it could be a super attractive investment just because of the long-term potential. I mean, there are predictions out there that they can go to 250,000, they can go to $500,000 a coin. Okay, and with that being said, you know, if it drops below 20,000, I mean, if you're in it for the long term, it could be worth taking the risk. Okay, it could be. Now, obviously, you probably don't want to put your life savings into cryptocurrency, but, you know, I'm just saying, this could present opportunity for people who, you know, who want to take more risk and who have a longer term outlook on cryptocurrencies. Now, there's always going to be FUD, right? Fear, uncertainty, and doubt when it comes to any type of investment, okay? Particularly when it comes to cryptocurrency. And I lived through the 2017 market crash, so I know what it's like to lose 90% of your money. I know it's not a great feeling, right? That's why, you know, I'm very conservative when it comes to crypto, because I lived through that type of crash. But, you know, I do get excited because I said before in my past videos about crypto, right? I know this is not a financial channel, but my financial predictions have been probably more accurate than my political predictions. That, hey, I would expect to see some type of crash after all these stimulus checks and all that money is in the economy and people have invested it. I was like, listen, I would expect to see, you know, a run up, right? A nice bull market. And then after that, around this time period, we could see a bear market in which, you know, Bitcoin could crash 80-90%. It could go back down under 20,000 after it had hit, you know, 60,000 plus. Okay, and it could present a great buying opportunity for those of us who believe that Bitcoin is going to be, you know, $500,000 in the future. So who knows, man? Like I said, this video is not investing advice. You know, I'm not telling you what to do. I'm just giving you my opinion. But one thing I will say, you know, I would expect more audits from the IRS, and I would expect that the Biden administration, one way or the other, is going to try to tax the middle class and extract more money from the middle class, one way or the other. So let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.